Trump's Greenland standoff rattles markets, but can Davos turn the tide? Wall Street's verdict on President Trump's Greenland gambit is in, and it's ugly. All three US equity benchmarks suffered their worst one-day fall in 3 months. Now markets are holding their breath, watching Trump's address at Davos for any hint that tensions could cool or escalate. So is it Arctic of the deal or the start of an all-out trade war? Toby Gibb is head of investment solutions at Artemis Investment Management. So Toby, the dollar slumped by the most in a month yesterday. Is the Sell America trade back, and is it something investors now have to live with as uncertainty lingers?
I think what we're going to see is a rise in the risk premium that investors demand for investing in US equities, as we saw indeed at the beginning of last year. So this kind of political uncertainty and policy uncertainty is going to mean that investors are going to demand more in terms of the returns that they require by investing in the US. That said, I think the US economy is in a really good place. Corporates are very well positioned balance sheet wise, as are consumers. And we have midterms later on this year, so the likelihood is that domestic policy in the US is going to be very supportive of the economy, very supportive of stock markets. So while sort of non-US investors in particular will require that higher risk premium, I think there's still going to be demand for US assets, but I think what we will probably see is more demand for diversification. So with this uncertainty, I think investors will be looking beyond the US for their investments.
Well, let's talk about the strength of the US economy now, and lots of talk that EU leaders may be ready to use their toughest trade weapons. If they do, how much real damage would that inflict?
The first wave of tariffs will be I suppose really politically focused, so on things like Harley Davidsons and bourbon whiskey and what have you, which while have the effect of catching the headlines, don't really have a big impact on the US economy. The second wave of tariffs would be more impactful. So looking at areas like aerospace, but also medical equipment. So that will have more of an impact, but still only 20-30 basis points maximum of impact on US GDP. I think what would be more significant would be if the anti-coercion instrument were to be implemented. Then that could then impact FDI, so investments in the US, but also services, which are much bigger parts of trade between the US and Europe. So if that were to be implemented, that would be more significant. But I think that really should be seen as a last resort, and also something that will take, given the way that things work in Europe, that's something that will take many months to agree upon. But also to implement.
Well, outside of tariffs, UBS is warning that any move by Europe to weaponize US assets would be a dangerous bet that would backfire. How likely is that scenario, and who would really get hurt?
I think it's unlikely, because I think everyone loses in that scenario, and I think particularly because for non-US investors, non-US governments even, there's relatively limited choice in terms of investments. There's no other market that's as big and liquid and tradable as US government bonds. So I think to me that's a pretty unlikely outcome, because I just don't see anyone really winning from that situation.
So finally, Toby, amid all this political noise, earnings season is heating up and expectations are high as well. Should investors be diversifying now or sticking with the tried and tested winners in AI and tech?
I think diversification is key. I mean, I think even in AI, I think it's quite difficult at the moment to know exactly who the winners are going to be. We've seen that particularly over the last few months with the sort of NVIDIA versus Google debate, and I think it's going to probably be a 2027 story even to really see who the winners are going to be. But I think, as you say, I think expectations are quite high. They have been coming down, as is always the case as we sort of lead into earnings season. But I think those companies that disappoint and expectations, particularly for some of the AI companies, are very high. I do think that in this sort of environment where volatility is high, where sentiment is a bit stretched, that earnings disappointments could lead to quite meaningful corrections in stock prices. So I think this is an important time for having diversification from a regional perspective, but also from a sectoral perspective.
That was Toby Gibb from Artemis Investment Management. Don't forget, you can watch more videos on Reuters.com.